Good morning, everyone. It's an honor to be one of the opening keynotes for the BIM Coordinator Summit 2025, first live in Dublin and now on the virtual stage. Today, I'm going to be taking you through how 4D asset data, when connected to blockchain and tokenization, is transforming real estate into a living, breathing, and finance-ready asset. First, to introduce myself, my name is Matthew Schneider. I'm the founder and CEO at Building Inc., and we support the digitization and tokenization of real estate all around the world. All of these pictures that you see in front of me are going to different places and teaching about real estate technology, what trends are happening, and how different stakeholders can leverage that. Now, in our approach, we make real estate more transparent, more efficient, and less risky. And today, I will be explaining how that happens. First, to set the precedent, ownership records and all of our documentation, how we capture information, hasn't really evolved in 5,000 years. From clay tablets to paper deeds to PDFs, we're still working with static representations of dynamic assets. Buildings are dynamic organisms. They consume energy, they generate data, and they evolve over time. Yet the systems we use to manage and finance them are these frozen snapshots. So let's get to section number 1, the current state and the gaps of real estate data. First, let's look at the state of BIM, Building Information Modeling, Building Information Management. We're pleased that BIM adoption is growing globally, but it doesn't represent a complete solution. It's been transformative in design and construction, but often the handover is where the golden thread breaks, or as I say, it's where it's been snipped. Data from the architects and the contractors is getting lost with the operators, and that's where so much of the value disappears. And as an extension, key stakeholders like lenders, insurers, and future buyers have minimal visibility, and this is a bad deal for everyone. As far as digital twins go, which is some attempt to capture BIM data and turn it into something lively, they're really mostly visualization tools. They're not structured for finance. They will help us see, but they're not going to help us underwrite, insure, or tokenize. And so now let's talk about tokenization. This is a technology based on blockchain that is predicted to help stimulate trillions of dollars of economic activity for the real estate sector over the next decade. Deloitte predicts that $4 trillion of real estate is going to be tokenized by 2035. And that's a huge leap from the $300 billion that was tokenized last year. So you've got somewhere around a 27% compound annual growth rate that's going to be happening. But a lot of the projects as they currently exist do not integrate lifecycle data into the token. And we believe that's what makes this worthwhile. That's the missing link. So the gap is clear for us. You have static, silo data that does not inspire investor trust. And if investors don't trust the numbers, they discount the asset. So you're losing value literally and in real time just because of bad data. So what are some of the basic attempts at solutions that have been rolled out and are slowly improving all of these? Well, we have the golden thread. This is the continuous flow of data across design, construction, operations, and a little bit of finance, but not really. If we can capture and connect everything, we can unlock new value at every single stage of a project. For example, during design, four-dimensional data allows us to model not just the cost, but also the time, energy, and even carbon that goes into a project. And all of these early insights reduce uncertainty and set the stage for better underwriting. During the construction phase, 4D BIM can let us visualize schedules, spot bottlenecks, and coordinate trades. And the result are fewer delays, fewer cost overruns. And all of those savings start to carry forward into the property's financial performance. Then we have operations phase. 4D data ties directly into Internet of Things, or IoT, sensors. Instead of waiting for things to break, we can predict failures and optimize maintenance. This lowers OPEX, or operating expenses, lowers the downtime, and a stronger net operating income, NOI. And this is the bottom line that investors care about. We also have compliance. This is shifting from box ticking to a more continuous feed with compliance engines. Imagine that regulators or investors or policymakers are able to pull ESG metrics directly from your building's live data stream. It's auditable, immutable, if it's based on blockchain, and removes the need for endless manual reports. That's saving you a lot of time as well. And you're going to avoid any fines that might pick up or discounts. So, moving into section number 3, where do these technologies come together so that we can start turning data into realizable value? This is where, finally, the golden thread connects to capital markets. When every decision, cost, and performance metric is recorded, investors are no longer just looking at projections or ideas. They're looking at proof. And that trust translates into higher confidence and stronger valuations. Let's look at the top line first. So what the property is worth overall. When data shows that your building is energy efficient, compliant, and resilient, investors will reward you with a tighter cap rate and valuation premiums. In other words, the same building becomes worth more because the uncertainty is removed. Then on the bottom line, predictive maintenance, fewer delays, reduced insurance premiums, these are all quantifiable savings. These translate into higher net cash flows, lower perceived risk, and these will directly affect the valuation. Then, after running all of our calculations, we want to cash in on that value. Numbers on a spreadsheet aren't worth as much as the numbers claim to be. You have to be able to realize that. You have to be able to receive the cash equivalent of the numbers on the spreadsheet. And that's where tokenization comes in. Valuation metrics, performance, compliance become dollar signs, and these can be realized. And when I say realized, that means that you could buy and sell that value. You could use it as collateral, and we'll touch on some of that, how that happens. But this value is based on verifiable, real-time underlying performance. And it all starts with that 4D BIM. Looking at the makeup of a token, it's a culmination of different elements. You have property data, valuation, revenue flows, ownership rights, risk ratings, and compliance. When you put all of this together, you have a financial instrument, which is a capital markets term, right? So our financial people will understand that. Markets can recognize and act on that value. They trust it, and you could truly exchange it for value. So you have the data coming in, the data creates the valuation, and you can realize that value. This is unprecedented, especially moving at the speed of the internet. That's what all of this promises. Real estate is an industry, antiquated, that moves extremely slowly. And now you have something entering the digital era, it's modernizing, and it's going to move rapidly. So will the capital, and this is going to create and spawn even more projects. The payoff of all this, once you mint a token, these tokens can be plugged into protocols. Just think of them as different service providers or applications. Real estate developers could borrow against their tokens. So the token says what the property value is and the risk, and you can borrow against that. Investors could trade these fractionally, buy into them, put them in a portfolio, and then trade them or sell them. Banks could bundle them together and create structured products. It's not just a number on paper anymore. It's collateral that you can move, leverage, and monetize instantly. Now, section 4, what are some of the other benefits of all of this, especially around trust and transparency? Well, blockchain is the foundation of trust. It gives us immutable audit trails, meaning that once a document, transaction, or inspection is logged, it can't be tampered with. For investors, lenders, and regulators, this removes disputes and builds confidence in the data. Let's talk about data. Well, when you add in the third dimension and the fourth dimension to asset data, you're multiplying its complexity. You have millions of data points every single year, especially in these sophisticated projects. Humans simply cannot process at that scale. So we use artificial intelligence and machine learning and automation to compute the complexity, spot the risks, optimize performance, and turn all of that noise into actionable intelligence, finding the signal in the noise. Risk is always priced in. So when you have data, when you're capturing data, lenders or insurers are going to look at what portions of it are incomplete. And this will widen spreads, raise premiums, or they could even refuse coverage. And when the data is complete, trustworthy, and verifiable, you're going to see the opposite. Financing costs will drop. So that same building literally costs less to own because of the presence of data. And then finally, I want you to remember that capital is global. So whether it's Dublin, Miami, or Dubai, international investors are increasingly demanding transparency. They want resilience, ESG compliance, verifiable report performance. Properties that can prove these things through data will capture capital faster and at better terms. So what is this shaping up? What does the future look like for us? Well, I want you to imagine that there are real-time portfolio dashboards where every building updates in real time, valuations, risk, and compliance. So no more waiting for annual reports or appraisals that are pretty worthless the moment that they're produced. This is what four-dimensional data plus tokenization makes possible. Portfolios that are truly alive. Tokenized real estate won't just sit on a balance sheet. It's not just a number. It's going to trade like equities. It will serve as collateral in lending and even create new derivative markets. It's already happening in early forms. And we believe that lifecycle data will accelerate this adoption. And you're going to see real estate moving at the speed of capital markets, at the speed of the internet. So to all of the BIM coordinators, any AECO leader, any real estate developer, you're not just building models or managing data. You are designing liquidity. The way you perform your labor, the way that you capture and structure that data determines how finance ready that property is tomorrow. It determines its success in attracting capital and the treatment that it will receive from very important stakeholders like lenders or insurers. It determines what the next owner thinks of this property. You have a very important role, even in the early phases, for the long-term success for this project. And think of it this way. If this property is successful and capital becomes available, then the portfolio can scale. That's more work being delivered to you. So these portfolios scale, and what constitutes a portfolio? It's buildings. These are our cities. So by doing great work, capturing and structuring and verifying data, bringing it to life, making it visible and accessible, we are building up our cities in a new way, a way that's transparent, more sustainable, more scalable, and that's a very promising future. So BIM coordinators, you have an extraordinary role in all of this. Even though many people don't look at the capital markets, you are a driving force for success. To close, give you 3 words: transparency, trust, connectivity. These are the outcomes of 4D asset data, and they're also the foundations of tokenized real estate. Together, they're setting the stage for a smarter, more sustainable, more liquid future for property ownership. Well, thank you very much, everyone, for tuning in to my keynote for the BIM Coordinator Summit. It's been such a pleasure. I really enjoyed Dublin, exploring that and learning about all the history, going out to the pubs and meeting all of the fellow AECO professionals in the area. We're doing really good work, so I just encourage everyone to get out there, to think of data as an asset, as a new oil that is just waiting to be extracted and processed. May the road rise up to meet you all.